Welcome to Massive Passive Cash Flow, the podcast that guides professionals to financial prosperity. Join our community and let's start building your wealth. Here's your host, Gary Wilson.
Welcome back to the Massive Passive Cash Flow podcast. I'm Gary Wilson, your host. I'm glad to have you back. We got a great guest today, John Casmon, and similar backgrounds, not exactly identical, but a lot of us, we were just saying, seem to come from the corporate world. And we bring what we learn from the corporate world into the world of being an entrepreneur. And a lot of us invest in real estate. Now, we, of course, cover other subjects too, all related to investing, but most of us are focused on real estate in one way, shape, or form, and including John. So, John, thanks for joining us, man. I know I've been reading about you. You're a good guy, successful guy, and I know we're lucky to have you. So, thanks for joining us.
Gary, thank you for having me today. And yeah, it's great to hear, a little bit about your background and coming from the corporate world and making that transition into real estate and sharing how others can do exactly the same thing.
That's it. It's not that hard. If I'll speak to the business owners here, if you're a business owner, a dentist owning your own dental practice or an engineer that has your own consulting firm, by default, you're automatically an entrepreneur. If you're a professional and a business owner, and all the skills you develop, like management skills, are very applicable to real estate investing. And so keep that in mind. In fact, I'll give you a big hint. If you own a business and your business is inside of a building, I highly recommend you own the building that you practice out of. Somehow or another, just buy the building. Okay. Buy it in a separate LLC. And we'll get to John here in a second, I promise, but this is such a big subject. You can leverage the properties, right? You can borrow against your properties to buy other practices, other dental practices, for example, right? Other consulting firms. And likewise, you can borrow against your business, right? Your consulting firm, your dental practice, to purchase real estate, as long as it's a business loan and everything's set up with business entities. Perfectly legal, and not only normal, you should definitely do it. And there's a lot of tax advantages to professionals too, who are also involved in real estate. And I'll let John touch on that. But so John, let's use that as a segue. If you can actually first take us back to where, how did you go from where you were in the corporate world to doing this? That's always an interesting subject, and I want people to really listen, because I'm telling you, if you and I can do it, would you agree other people can do it too?
Absolutely. Listen, I think real estate is one of the greatest pathways to generating wealth that's known to man. And it's also one of the most accessible ways. And there's so many different strategies. I think sometimes people get too caught up in what real estate investing is, and they only know about, being a landlord or being a flipper, right? Buying a house, fixing it up and selling it. But there are really a lot of different strategies. For me, I started off in corporate America, as you alluded to. I spent 15 years there working in advertising and marketing, doing campaigns for Nike, Coors Light, Mountain Dew. I worked at General Motors. And what really got me into real estate is during my time at General Motors, early in my career, I was there when we went through bankruptcy. And I watched what that did to the company. I watched what that did to my colleagues, to our leadership. And I had a lot of time to reflect what my future is going to look like. And as I thought about my senior leaders and try to identify, well, whose pathway do you want to mimic, right? What about that senior executive or that senior executive? And I couldn't find anybody who I felt was happy, anybody who was both successful and happy, had a good family life, good work-life balance. And I ultimately looked at a guy who was a product manager, kind of middle-level management, older gentleman, but he was happy. This guy came to work with a smile on his face every day, bright and early, crack jokes. I mean, we're in the middle of bankruptcy. People are scared about their jobs. And this dude was cool as a cucumber. And I remember talking to him all the time, and he always had some great advice. And the thing that made him different was he owned real estate, and he had made millions of dollars as a real estate investor. So he worked the job because he enjoyed it. He didn't need it. And that was a big aha moment for me. Fast forward, as I started to figure out how to get into real estate, I started investing in Chicago. When I moved to Chicago, bought a 2-unit building, rented out 1 unit, lived in the other. And that ultimately sparked kind of my path to buying and acquiring more real estate. Today, we've invested over $125 million worth of apartment buildings, and we work with everyday professionals to get all the benefits of real estate investing without the headaches of being a landlord or flipper themselves.
Yeah. Well, Chicago has always been such a good area for investing. It's I guess today still the third largest market in the country. And but it's when people see pictures of Chicago, they think of the downtown area with the Sears Tower, and it's all great. It's a lot of fun city. I'm not knocking other cities. I'm just telling you, if you haven't been to Chicago, go to Chicago. Spend at least a weekend there. It's a lot of fun. But the sprawl, the urban sprawl just goes for miles, miles and miles. And there's so many opportunities, so many areas out there. So are you just in Chicago area, or have you branched out in other states? Kind of tell us about that a little bit, if you don't mind.
Yeah, so I moved to Cincinnati about 5 years ago, and part of that process was investing in other markets. So we invest primarily in the Midwest and the Southeast regions because we're buying
Mhm.
larger apartment buildings. We do have a little bit of a wider parameter of where we're looking at deals, typically in markets like Cincinnati, Columbus, Louisville, Indianapolis. Those are some of the markets that we play in on a regular basis. But I did start in Chicago, and to your point, Chicago's a large city. 3 million people call Chicago home, still the third largest city in the country. And with that comes a lot of different strategies. You can invest in luxury properties. You can invest in workforce housing properties. You can invest in lower income properties, right? So it really depends on what your unique skill set is, where you live, where you're comfortable, your knowledge, your connections, all those different things. And I think this is
Mhm.
why it's so important for people to understand that I think everyone should be a real estate investor. Now, what
Yeah.
strategy you use depends on your own circumstances, your own skill set, and things like that. But there's a way
Mhm.
to make money in real estate no matter who you are or where you're at. So figuring out the right strategy and the right pathway for you is really important to get started.
Yeah. What's interesting is uh first off, thank you for sharing that because you're absolutely right. That you moved to Cincy, and Cincy's another great area. I mean, I love that town. Classic. I think there's a hotel there called the Brown, if I remember correctly. It's downtown, or maybe that one's in Louisville. I don't know. I've been to both cities, and by the way, Columbus. If I don't know if it's still true today. When I started looking there years ago, their claim to fame was they had the largest percentage, the highest percentage of people with master's degrees or more in that area per capita. And it's a great area. My oldest brother lives in uh, Granville, it's right outside of Columbus, and he's a professor at Denison University, Denison College. But going the other direction back to in Indianapolis, it's not too far from Louisville, not too far from Chicago. You got Gary, Indiana, right in between there. I mean, you're within a day's drive. You've got access to a lot of markets, primary, secondary, and tertiary markets. So have you looked into some of the other markets outside of Lafayette, Indiana, or Fort Wayne, Indiana? The college towns are not big, but they've got some buildings and they've got some draw there and stability, or you're primarily in the bigger cities.
Yeah, we primarily focus on the bigger cities, and there's
Okay.
certainly opportunities in those really tertiary markets, right? Lafayette
Hmm.
and
Hmm.
Grand Valley and some of these other markets
Hmm.
for sure. There's definitely opportunities there. Our philosophy is, we like the Midwest, particularly growing parts of the
Hmm.
Midwest. We want to see population growth. We want to see job growth. We're looking at these different metrics, but we also want to see enough people living there where we feel there's going to be demand on the back end, right? Demand from renters, but also demand if and when we go to sell. I think one thing that's really unique in our approach versus maybe say other asset classes like residential is it is important for us to plan for the exit. We want to have a buyer on the back end who's willing to pay a premium for our properties. So we do look at larger metros, larger being,
Yeah.
populations of maybe 250,000 people or more, right? So 200,
Hmm.
250,000 people. That gets us into the Cincinnati's, the Indianapolises, the Columbuses, right? We
Yeah.
want that because we want to have buyers on the back end. My concern, and this is just my own approach, when we go to those really smaller tertiary markets, we run into two issues. One, on the back end, will there be enough demand from buyers? Second is labor. Right now, there's a big labor shortage and finding great quality talent. It's tough everywhere. It's extremely tough in a smaller tertiary market. So that's one of the things that holds us back. But I would say, hey, if you're looking at a market like that and you've got connections or you're local, by all means, if it makes sense for you, move forward with it. But for us, we try to stick to a little bit of the larger markets.
Yeah. Well, that makes complete sense too. What I want to do is I want to go back now to the consumer, and we mentioned a couple different vocations, and when it comes to vocation and demographics, people in the corporate world, if they're like me, I got to a point I was like, there's got to be something more. I know there's more to this thing called life than getting a degree, getting a job, going to work every day at 6 in the morning, coming home at 5 in the afternoon, getting dinner, reading the paper, talking to the kids, and go to bed. You know? And so I started investing, but I was blessed because my college roommate, my freshman year, his name's Socrates, by the way, his dad was a big investor in Richmond, Virginia. And he helped us get our first property right out of college. He didn't give us money. He just showed us how to do it, right? He showed us the ropes. And this was back in January 1986, different kind of a market. But what can you tell people who are listening to this, all the professionals out there that have that itch? They know there's something more, but they paid for that degree. They're in a career. They get the 401k, 4 weeks vacation, all that. For you, was it a challenge to make that transition? And what can you share with the other people who are a few steps behind you thinking about the same thing,
I think that's a great point, right? First of all, I think everyone needs to look internally and ask themselves flat out, do you love your job? If you do not like your job, you need to plan your exit because eventually that's going to come out, right? No one wants a doctor who hates being a doctor, right? That person's not going to put in the extra effort, put in the extra work. You're going to get sloppy. And if you're doing it just for the paycheck, that's going to end up being problematic at some point. So I would say first question is, do you love your job? The second thing is whether that answer was yes or no doesn't matter. You still need a plan B. What if something happens where you're unable to perform at your job? What if you get let go? What if you're forced to move? I'll go back to my time at GM. One of the things that happened, and it didn't happen to me, but one of the senior executives, and when I say senior executive, I mean the person who became the de facto face of the company. When we were doing those interviews on cable news outlets, she was the person that they put out there. And if you recall that time, our CEOs all flew down there in private jets and they got just, completely ripped apart. And after that, that CEO he was never seen in public again.
Right?
They put this person as the face of the company, and she moved from San Francisco to Detroit. And then she had to move from Detroit to Shanghai because someone else came in and she just wasn't their person. And
Right.
they moved her to Shanghai. And I just looked at the way corporations work where, you're pieced on a board, right? I mean, it's just is what it is.
Yeah.
And you get moved around where they need you, or they want you to get some experience to check the box, right? You got to make some lateral moves. And I just realized I didn't want that. So if that's where you're at, you've got to figure out your plan B. If you, again, have a great job, I mean, if you're a surgeon, what happens if you break your hand? What happens if, you suffer from an illness or something like that takes place, right? Those kind of things absolutely can happen. So what I would suggest is start working at plan B. And real estate is a great passive investment to get you going. And I think that's a great way to start because you don't have to learn everything and be the expert. If you really want to do that, if you really want to be hands-on, have at it. But if you are a busy professional, you can invest and partner with different groups. You can invest passively through different strategies. We focus on syndications where people invest passively in the deals that we bring to the table. We take all the work as far as bringing on contractors, overseeing the deal, making sure we execute on the business plan. And what happens a lot of times is those people who invest with us, they may, learn, they're asking questions, they're getting more comfortable, and then they may go out there and invest in deals. One of the best stories I could tell you is I've got two sets of friends who are like our dearest and closest friends I've known for, one group for about 12 years, the other for about 20 years. And both of them have invested with us. The first group, they invested in our very first syndication deal. And then they moved on. They bought themselves a 4-unit property. They have one of the units as a short-term rental. They rent out the other 3 as traditional long-term rentals. They then invested in, if you know what those mining businesses, it's like cryptocurrency mining, where they have
Okay.
these generators that, essentially help for the transactions. They credit that first investment with us to help them get started, right? To build the confidence, to ask the questions. They told me that if they didn't have that first investment with us, they may not have ever invested. And I think that's really important is just getting started, right? You've got to have a pathway to get started. Same with me, that two
Yeah.
unit. It was only 2 units and I lived in one of the units. So technically it was only
Yeah.
one real rental, but that 2 unit got me started. And then when I saw that it worked, it gave me the confidence to go out there and buy the next one, which was a 3 unit. And then I ended up buying an 8 unit, right? And you scale from there. So I would
Right.
say if you want to do a small rental to get started or a small duplex, great. But if you want to invest passively to get started, that's another pathway to get going. So figure out what steps you need, but you want to take control over your life, take control over your financial future. If you want time freedom, location freedom, I know we were just talking about going out to Germany and spending, 2 weeks out there. If you
Hmm.
want to have that kind of flexibility, you have to take control. And the only way to do that is to create passive income, to invest in assets that give you more flexibility.
Yeah. Yeah. Well said. Now, something I want to point out to people is you do have choices, and so John, you mentioned the syndications. And when I first got started, I'd never heard of them before. I was just, Sock and I went and bought a 4 bedroom, 2 bathroom ranch in Virginia Beach, Virginia, and rented out the other 2 bedrooms to two other guys. By the way, their combined rent paid almost all of our Sock and my outlay every month, other than about $50. So we for $50 a month we each own half of a 4 bedroom home in Virginia Beach. And it's just amazing. But later on, it wasn't until the 2000s that I really learned and understood about syndications. But so for professionals, kind of tell us, take us through that decision process because everybody's got to decide, well, do I buy like a duplex like you and I did? I kind of something small and own it outright. Um, or do I just invest passively, which is probably going to be a little bit easier. But maybe if you could touch on that a little bit for these folks that are just get ready to make that first decision.
Yeah, absolutely. I think the first question you have to ask yourself is, what is your primary goal? Okay. If you
Hmm.
are looking for time flexibility, financial freedom, things like that, then syndications could be an option for you. If you have limited capital, however, then you may need to be more hands-on because you may not have the capital necessary to invest. I'll give you a quick little story and then I'll answer your question directly. When I was started investing, I bought that 2 unit, then I bought that 3 unit that I mentioned. Well, that 3 unit, I had a turnover, right? One of the residents left. We had to get the unit ready for the next renter. And I got a quote from these painters, and they wanted to charge me $700 to paint the unit. And I laughed. I'm like, you're crazy. I'm not paying you $700 to paint this unit. I'll paint it myself. So Saturday morning, I got all the materials. I go over to the property. Mind you, I'm married now. I have my first child. And my baby is maybe 3 months old at this point, and it's a Saturday. I'm a busy professional myself. I got a full-time advertising job, and here I am Saturday morning going to Home Depot, getting all my materials. I, you know, painting. If you know painting, it's not as easy as we think it is, right? You gotta prep the walls, you gotta sand the holes, you gotta do all this stuff,
Yeah.
right? So I do all of this. I get the first, coat of primer, I do first coat of
Hmm.
paint, all of that stuff, right? It's about 3 o'clock in the afternoon, and I'm still at this property, literally waiting and
Right.
watching paint dry so I can do the
Yeah.
next coat. Meanwhile, my family is at the park, right? My three
Yep.
year old newborn son and my wife are at the park. I'm in this hot apartment watching paint dry. And at that
Yeah.
moment, I had to ask myself, what are you doing? Because I thought you
Hmm.
got into real estate to give yourself more control over your life so you could be where you want to be when you want to be there with people you love, financial freedom, time flexibility, all this great stuff. Yet here I was in this apartment building watching paint dry, right? Working my ass off, excuse me. But at that moment, I had to realize what I had really gotten myself was another job.
Yeah.
And as an investor, I think it's really important for you to be honest with yourself. Do you want a part-time job where some of these investing strategies, that's exactly what you're doing. So do you want a part-time job or do you want to truly invest passively? If you have the means, if you're a busy professional, if you want to spend your weekends with the people you love, doing the things you love, then I would strongly urge you to think about a syndication as opposed to buying a rental where you're going to be the person in charge. Now, why syndication? What does that mean? Well, syndications are typically going to be bigger investments, right? They can be
Hmm.
smaller, 10 units, but a lot of times they're 50 plus unit apartment buildings. The
Hmm.
size matters because that larger investment allows us to run it more professionally. If I've got a 100 unit apartment complex, there's enough money there to hire a full time on site property manager. There's the money to hire a full time construction manager or maintenance technician. I have a full time professional property management company. So, because of this, we can run it like a business. It's not John over there on the weekends painting the units. There's a professional team that is hired
Right.
to paint these units. And because it is more professional, we have the best of the best, right? We have full-time people. We have everyone who is trained on this. They make a living doing these things. And then we're running it as a business. So it truly is a
Yeah.
business investment as opposed to kind of a weekend hustle, which is what most people end up doing. As an investor, you get the benefits of, again, owning real estate, getting all the tax perks that come with that, getting the cash flow distributions, getting the appreciation of equity on the upside, without, again, having to do all this work yourself. So the way it works is, as a passive investor, you would work with an operator like myself. You invest, and let's just say it's 10 of us, right? 10 of us would invest our capital into this deal, and then that operator would oversee the execution of it. So as an LP limited partner, your job is to make sure you're finding the right people to invest with. You're asking them the right questions. You understand where the risks are. You understand the business plan, and you feel comfortable with what they're going to do. As the general partner or the operator, their job is to execute, find the deal,
Yeah.
manage the deal, get under contract, and make sure that the property is ultimately going to make money for them. So syndication is a great way to invest. I will tell you
Mhm.
that it does require you to relinquish control. So you do need to find somebody who you
Mhm.
believe in and you trust and who is knowledgeable in the space. But it also can be capital intensive. Typically, minimum investments are $50,000. Some deals are $25,000. So again, if you don't have that kind of capital,
Mhm.
then it may not be the right fit for you. But if you do have that kind of capital and you really just want the perks of real estate investing, but you
Mhm.
don't necessarily want to go out there and be a landlord or be a flipper yourself, it could be a good strategy to add to your portfolio.
Did you know that you can participate in class every Monday? We call it Monday Night Live, 7 p.m. Eastern, with me and dozens of other investor agents from around the country, in fact, the world. Every Monday, totally free. No selling, no recruiting, just straight up education on anything and everything in real estate. And we have a lot of good guests coming on once or twice a month, bringing in expertise on subjects like how to buy a house with crypto. Okay. How about them apples? What about AI? How's AI affecting our business? How about the metaverse, blockchain processing? We're already using it in title work. So come on to Monday Night Live. Be ready to take notes and ask questions because it's live and engaging, and you get to participate by asking questions and meeting others. So we'll see you there. Go to GaryRealEstateWithGaryWilson.com. Click on the resource tab, drop down, and you'll see Monday Night Live. And in there, you can see one of the most recent classes. But more importantly, you can register for class as many as you want going up to like the end of the year, I believe. So in any case, do that. We'll see you on Monday Night Live. Look forward to meeting you in person. Take care. Yeah. Yeah, I agree. When you were talking about painting, I was thinking back to when I first started, and I try to do everything, and I'm horrible at painting. Everything looks good inside my mind. But the only thing I was really good at in a practical way was trim work, like carpentry work. I just love working with wood, but I was a horrible painter. I mean, it looked like a kindergartner did it. And then my first experience with plumbing was a total disaster. And I was one of those faucets we call the one arm bandit. You got the one arm, you lift up, spin left, spin right, and then it goes either hot or cold. And it was leaking around that ring. And so I thought, well, how hard can that be? It's probably just a washer, some kind of O-ring type of thing. So I took the little set screw out to take the handle off, and then I realized, oh no, there was a bigger giant screw in there, and a nut that I need a wrench to take off. So I took that off, and ultimately, two or three layers deeper, I eventually was at what they call the stem. When I took that collar nut off, that thing shot off like a bullet, and water started shooting up like a fountain. And it actually had the comedy was this was actually my own house. So my kids are there with their friends. My wife's there. Of course, she had a head full of hairspray, and she's screaming, "This is not fun. This is what the kids are getting umbrellas, running around screaming and laughing." Oh, and the shut off under the sink didn't even work. I had to go down to the basement and turn the
Oh,
main shut
wow.
off, so we had no water in the whole house. So I knew at that point I'm not meant to be managing, or maintaining things. So I did build a property management company as a result, long term. But the syndications came around later, and I got to tell everybody listening here, it it's like it doesn't have to be such a big leap like it was for me. It doesn't have to be a long, painful process of learning everything the hard way. You could team up with someone like John, who's already doing it, right? They already have mastered the skills of property identification, property analysis, negotiating, and identifying and securing the right management companies to take care of things. And then your role is to basically deposit your profits. much easier. And I know you're thinking to yourself, well, Gary, I could probably make a lot more if I just buy the thing myself. And I'm not going to disagree with you. I'm just telling you, like John and I have been discussing, you got to decide. You're either going to do that, and you're going to sell yourself. You're going to trade your time with your family, with your kids, a precious time for painting and plumbing and crap like that. I'm telling you, my experience is not worth it. I'm sure John would say the same thing. Um, so moving along here, what types of properties? So I know you're real big on multifamily. You mentioned 50 units, 100 units, Sean. So for professionals out there listening, accountants, and again, dentists, chiropractors, engineers, pilots, um, you know, why multifamily versus other types of properties? What's the big draw there?
Yeah, so I'm a big fan of commercial real estate, right? And I
Mhm.
like multifamily. We are definitely interested in like hotels as well, but multifamily is our bread
Mhm.
and butter. And I think multifamily is simple enough where most people are familiar, right? Everyone knows what an apartment building is, whether you've actually lived in one or not. You know what an apartment building is, right? You without knowing anything about real estate, you have a general sense of how you make money in apartments, right? So you get renters, they pay rent, whatever your bills are, whatever, you pay those, and what's left is your profit. So that is very, very tangible. In the same way, I think real estate, everyone knows, there are houses out there, they can go up in value. You can make money through rentals. Apartments is really just a scaled up version of that. When you
Yep.
get into industrial, when you get into self storage, when you get into office and retail, those are certainly attractive asset classes if you understand the landscape. If you
Mhm.
don't thoroughly understand the landscape, it could be very risky. And the thing that's really important with commercial real estate is everyone in commercial is an investor. So you're
Mhm.
not finding, grandma who, just passed away, and the kids inherited the property, but they live, 300 miles away. They don't want the property. You're not finding that as frequently with the house. Okay, if someone is credible enough to own a 50 unit or 100 unit building, they're probably savvy enough to know how to sell it, even if they've inherited. They know not to just,
Yep.
sell it to the guy who sent them a text message, right? They're going to probably find a broker or an agent and say, hey, you know what? We've got this property. We don't want it, or we have this other issue. Can you sell it for us? So the thing that's important there is, again, if you're in commercial, you have a little bit of a less leeway. You have to have a real good business plan on what you're going to do versus if it's a house and you buy a house in the right area. Very few people are buying houses for investments. They're buying a house to live in. So they're not thinking about, oh, if I do this and do that and do this, we can make it worth this, right? They're not thinking about it that way usually. Commercial, they are. Everyone is. So that's the thing that you've got to be mindful of. With a multifamily, I would tell you this is when I became die hard on it. And I was always interested in multifamily. I always believed in multifamily, but when that was concrete, put to stone for me, is I started flipping houses. And flipping houses was not my forte. I was a businessman, right? I worked at advertising agencies. I worked in business and logistics and interpersonal relationships. And I did, our agreements. I did our PSAs. I did all these different things in the corporate world. And what I realized is that when you're flipping houses, dealing with contractors on a tight timeline, that's a
Mhm.
really blue collar approach, right? You got to be on site. You got to make sure guys are doing what they're supposed to do. You got to see when they're coming in, when they're leaving. And I had a full time job. I couldn't be sitting on site all day. I would drive by the property and check in and text the property or the contract construction manager, but I couldn't just sit there and make sure the crew was doing what they were supposed to be doing. I had to trust them a little bit. And then when I
Yeah.
would go to the property and see, oh, we're behind here, or they did this wrong, or we got to do this, it became an issue. And I realized this was just not the best way for me to invest because I didn't have that time and the bandwidth to be on
Hmm.
site managing at that micro level. The big thing though was those flip projects don't make money until they're sold, not when they're complete. Not when they're
Right.
done. It's got to be sold, right? End to end
Yep.
sold. And the market can shift in that time frame. And
Hmm.
I'm, not losing money, but every day that property sits, my profits drop, and it gets to the point where I could be in the negative. The difference with multifamily is we are buying multifamily first and foremost for cash flow. We're buying properties that are making money. We're buying them based on the
Right.
current business operations. And what we're doing is we're going to come in with the business plan to accelerate that growth, to accelerate those profits. So we're always in a cash positive or at least a cash neutral position with these assets. And we're trying to scale that up. When I was flipping, these properties generated nothing, right? And it was one payday.
Right.
It was the day it sold. We got the settlement statement. I got one big check, and that was it. And a lot of
Yeah.
times, if something went wrong, I got my money back, right? But it wasn't
Yeah.
necessarily a huge profit. And that's the
Right.
thing that with flipping, there's more risk involved because you do have to time the market. And some people maybe, if you're in the space, it could be a good fit for you. But for me, it wasn't. And I think if I were, knowing that my background and I was in corporate America, if you're an engineer, you're a doctor, you're a dentist, you're not someone who could be on site daily or at least every other day, and I mean spending a considerable amount of time on site, then I would suggest you invest in income producing assets that have the ability to appreciate over time. Flips are
Yeah.
not income producing unless you plan on converting them into a rental. And most people don't
Right.
want to do that. That's like the backstab approach. So I would
Yeah.
definitely say multifamily provides a lot of that value for you.
Yeah. I agree. And plus, with flipping, you're remodeling differently. You're remodeling to a different market than you do on rentals. So if you change your strategy halfway through a flip, chances are you've already invested too much money. You know. But the thing about the multifamily too, and you mentioned early on, is the scalability. And that was I bought hundreds of multifamilies, but the first big one I bought was a 78 unit apartment building. It eventually became a 90 unit. But I realized very quickly, and the rents were one of the reasons we bought it. The rents were really low,
Mm,
compared to the market rents in the area. And in the first couple of years, first 4 to 5 years, we had raised rents $100 per unit twice. So we raised rents at 200 per unit in a relatively short period of time. But what occurred to me was I was like, man, holy smokes! If I raise 100 or rents $100 a month on a single family home times 12 months, that's 1,200 a year in cash flow at a 10% cap rate. That's a $12,000 increase in my net worth, right? But if I raise rents $100 on a 100 unit building, that's $10,000 a month or $120,000 a year in cash at a 10% cap rate. That's 1.2 million to my net worth. And I'm like, I'm never going back. I'm grateful for all the little ones I bought because it got me to be able to buy the
yeah,
bigger one, right?
yeah,
But once I got the bigger ones, it's like I'm not going back. And then I started understanding why the REITs are doing what the REITs do. So, if you don't mind, I've got to ask, and I know I jump around again, but I apologize. But,
yeah.
but back to the regional component. So you mentioned, Cincy,
Hmm.
Louisville, Columbus, Indianapolis. Are there any tools you use, or websites, data sources to determine the criteria that you need? Like, in other words, Indianapolis
Oh,
meets 4 of the 5 criteria, and I got this information from U.S. Census
yeah.
Bureau or something. There's things you don't mind sharing, like, how do
Sure,
you
sure.
know? And
Yeah.
yeah.
Great question. And I want to like just super highlight the point you just made because it's such a
Okay.
powerful point. I want to make sure people understand. You raised rent by $100, right?
Mhm.
$100, but you created $1.2 million in value.
Mhm.
That's the power of multifamily investing, right?
Yeah.
A $100 rent increase equates to $1.2 million in real value based on the
Yeah.
cap rate. And that's again, that's the difference between residential and multifamily. You do that over 100 units. You can
Yeah.
see why this is such a wealth generating tool that people like to use. So, to answer your
Yeah.
question, when it comes to markets, we're looking at a couple different factors, and then we use different resources to find it. The first one we're
Mhm.
looking at is current population and population growth. So I want to know
Okay.
how many people live in this market, how many people are moving to this market, what happened over the last 5 years, what happened over the last 10 years. So typically we're looking at the Census Bureau for that information. Then we're going to look at jobs. What kind of jobs are here, what industries are here, how diversified is the employment base. They were looking at the Bureau of Labor and Statistics. And one of our key points there is we don't want to see any industry dominating a market. And by dominating, we mean like 25 to 30% of the jobs are in the same industry. I'll go back to my time in the automotive space. Detroit obviously is well known for being an automotive city. Well, when we had our downturn back in 2008, 2009, imagine what that did to not just rents, but the overall market. And it didn't matter if you weren't in automotive. If you were a dentist, you weren't in automotive, but guess what? So many of your clients were that it
Hmm.
impacted your overall business, impacted your housing value. So those are things we want to pay attention to because we want to see a diverse employment base. Same thing with
Yeah.
travel and tourism. Think about maybe Las Vegas as an example, right? So a lot of these markets, you want to see diversification on the kinds of jobs and the kind of industries that are there. And then the
Yeah.
last one that we're paying attention to is we want to see the multifamily trends, right? I want to see multifamily developments, multifamily rent growth. We want to see what's going on, and we also want to see just the ease of doing business, right? Is it landlord friendly? Is it business friendly? Things like that. So we look at a
Mhm.
couple different data points. We talked about the population, where we get that from census, Bureau of Labor and Statistics for the jobs and industry information. When it comes to multifamily, we're really scouring different platforms. We're looking at big
Mhm.
brokerage firms. They do a lot of reports. We can take a look. There's a website that gets into rental data, delinquency data, all that kind of stuff. My favorite website, though, to compare this data is datausa.io. It's a great website because
Yeah.
if you've ever been to the census website looking for data, it's not very pretty. I mean, it looks like it was built on like the program, like from 20, 30 years ago. So Data USA is a very inclusive website that pulls data from these government websites, but it puts it together in a graphic format that's much easier to read. So I like to use
Yeah.
datausa.io to help me see that information. Another website I like to use is City Dash Data. That's a great website if you're trying to get into a local market and understanding, hey, what's going on in this area versus that area. So we like to use those different resources to help us look at markets and neighborhoods.
Yeah. That's so interesting. You mentioned those last two. We use the same ones, and over the years, it makes it so much easier. If you go to the Census Bureau yourself, you've got to learn how to create reports inside the census website. And I'm not saying you need a college degree, but I can tell you this. I know people have struggled with it, and so we look for other sites like that to share with our students. And so I appreciate you sharing that. You're
I'll,
definitely
I'll give
sharing a
you
lot
I'll
of
give you
gold.
one more, Gary, too.
Okay.
So this is one that I use with my students as well, but I'll give you this one. This is my little secret one. It's justicemap.org. Okay.
Ah.
And Justice Map, the thing that I love about it is it takes the census tract and you
Okay.
can look at the median household income. It has other stuff like race and other things like that, but I like to look at it to look at the income. And if I'm looking at a property, I can look and see the division. I can see if it's in this census tract versus that census tract, where those dividers are. And it's not the end all be all, but a lot of times when you're looking at a property, they'll tell you the household income within a 1 mile radius or a 3 mile radius. And that's helpful. But what you really want to know is the people who live at this subject property or would be living at this subject property, what is that median income? And what
Yep.
are those factors? If there's a really nice neighborhood half a mile away, that's going to skew your numbers greatly, right? And if those people would never live in your property, it's not helpful. So that I like that website just because it helps me to get a broader sense of what's going on and to start asking more intelligent questions. So again, not the end all be all, but it helps me gather another piece of data, another piece of information to make an informed decision.
Yeah. Well, overall, you're definitely. I mean, the heartland, the Midwest. It's just rock solid, stable. And it's growing. People, particularly people who are family oriented, they like that, and that's what they're looking for. Of course, the Sun Belt is been growing for quite some time. Um, hey, I know we're going to get short on time here, but when I ask you on the syndication part, how do you attract investors and raise the capital? Like, how did you get started? Because at some point, you got to get people to raise their hand and say, hey, I'm gonna vote for John Casmon because I think he's a good guy. But but eventually you get enough properties, it's like you don't have to worry about it because people will come to you automatically. But how did you actually get started with that?
It's a great question. I had never raised money for anything in my life. So
Mhm.
moving into this space was definitely a bit daunting. But one of the things that helped me tremendously was I had a strong belief in what I was doing. We had built up our own personal portfolio and I needed help, but I also realized other people needed help. Those busy professionals, my colleagues when I was at GM, uh, those individuals needed places to put their money so they could start their own investing journey. I wanted to scale and I just couldn't wait and keep saving my own money, which is how I was investing. So I ended up connecting with other people, learning how they did it. I hired a mentor, and that mentor had raised money for a deal, and he kind of walked me through the legal process of how to do it. But ultimately, to get people comfortable investing with me, I just had to be transparent and talk to them and share my knowledge, share my wisdom, educate them, and get them comfortable with the idea. And being transparent, I think, is really key because people want to trust you, and they're going to invest with you if they know you, they like who you are, and they believe in you. But ultimately, they have to trust that you're going to do the right thing, right? And you're going to protect their money. It's not to say that it's a guarantee or it's perfect, but they want to trust that they're betting on you. They're making a good choice there. And because of my background in corporate America, where I was a part of the team that turned the Buick brand around coming out of bankruptcy. We're the fastest growing brand in America. I was recognized as one of the top marketers in advertising by Black Enterprise Magazine. I worked on the advertising side and won awards for some of the campaigns that I delivered. Right. I grew our business. I grew our client base. I grew our billings. So I had these professional successes, and those people who knew me professionally just know me from that standpoint, know that, all right, if John can deliver on this, we believe he's going to do whatever it takes to win in real estate. So I think that helped
Yeah.
tremendously. The biggest tip I could give anybody is you have to share what you do with people. Nobody can invest with you if they don't know this is what you do. Now, you wanna be credible. I think it's really important for people to do what I call the three C's, right? First is credibility, the second is confidence, and then the third is connections. And that credibility comes from what I said, right? What have you done in your background to justify that you can do this? And then also, who have you surrounded yourself with, right? If you don't have that much experience, somebody on your team, if not everybody else on your team, needs to have that experience. And then confidence. Confidence can't be faked. I'm not talking about blind hubris. I'm not talking about, the good old, hey, just fake it till you make it. I'm talking about confidence from preparation, right? Putting in the work, listening to podcasts, reading books, analyzing deals, touring properties, meeting with property managers, meeting with brokers, meeting with contractors. You have to put in the work. Even before you do that first deal, you have to have real confidence because you've at least gone through that process enough time. And then connections. Clearly, you got to network, you got to build relationships with people, and you got to talk to those folks to expand your network.
Yeah. Well, that's really what you're talking about is your branding. If the brand works, it's only because it's authentic and genuine. The person behind the brand demonstrates and exudes all the character traits you just talked about. So let's kind of wrap this up with the brand. Did that evolve over time, or did you have it like you have it set in your mind when you first started? This is how I want people to perceive me, and it's so important. People don't realize, at least until they get into business, and realize how important a brand is. But can you touch on that, and then we'll kind of wrap it up after that. If I know we've probably gone over a good bit, but this has been one of my favorite ones, quite frankly. So I appreciate it.
Yeah, Gary, I think it's a great question. And the thing is that so many people don't understand what a brand is. And they think a brand is like this marketing thing to sell people on a product or service or themselves. But all of us have a brand, right? You have a brand, right? I know you when we first started this conversation. I know you as the guy who does the global, real estate agents, right? I'm sure you did a lot of things before this in your previous life, but that's how we got to know each other. So that's kind of the way I view you. So
Mhm.
what we have to do is we have to craft our image and the brand so people see us the way we want to see us. If I wanted to be
Mhm.
known as a real estate investor, I have to tell people I'm a real estate investor. I have to show them that I invest in real estate. I have to answer real estate questions. I have to go to real estate events, right? I have to show them so they see me, oh, John, the real estate guy. Before
Mhm.
that, it was John, the advertising guy. That's what they saw me. That's what they knew I was doing. That's what I went to school for. That's what I was doing, right? So we all have a personal brand, but then it's one thing just to be known as that. Are you good? Are you trustworthy? Are you reliable? Are you confident? Like all these things matter as well. So think about it like this. A brand is just a megaphone for whatever it is you want to say and whoever it is you are. And a brand is what people say about you when you're not in the room, right? If I'm in the room, I can tell you all the stuff I want you to know. But if I'm not in the room, if Gary's talking to somebody else and they say, hey, I saw you had John on the show. What'd you think of John? Whatever Gary says, that's the brand to Gary, right? If we're talking about tennis shoes, and I say Nike versus say Z100s, you're going to have your opinion, whatever you think of it, positive, negative, corporate philosophy, whatever it is, right? That is the brand. It's not when you see the TV commercial where LeBron James is on the screen and all that. That's a part of it, right? We can do advertising to help shape it a little bit. But at the end of the day, the brand is what people feel about you, your company, your service. If you're a dentist, doctor, engineer, same thing, right? I can hire any doctor. Why this doctor versus that doctor? Well, that's part of your brand. Oh, he's trustworthy. He's great advice. He cares. He's going to follow up with you. All those kind of things. That's a part of your brand. So don't think about it from a cutesy marketing standpoint, logos, colors, graphics. No, a brand is simply who are you at your core, and you want to amplify that thing so people understand who it is they're doing business with.
Yeah. Amen. Yeah. You got it. Hey, so this has been really good. I know we went a little bit long, but you deliver a lot of content. I want to let people know that they don't have to just listen to you on this one podcast. You've got your own podcast, and it's called the Multifamily Insights podcast. Is that right? Okay.
Yeah, Multifamily Insights. Yep.
Okay, cool. And I'm looking forward. I know I was scheduled to be on that until I got the German crud. I shouldn't say that. German people are wonderful, but the flu was pretty rough. So, in any case, I want to let people know to listen to that. But also, you mentioned on your website, what's the name of the website, John?
Yeah, CasmonCapital.com.
CasmonCapital.com. Okay, and on there, tell people a little bit about that, what they can find there.
Yeah, so we put together a sample deal package, and a lot of times we have conversations and people just don't know where to start. Whether you want to be active and you heard what I said, and maybe you've got some buddies who you can put together and they want to invest, and you say, hey, I can do that. Take a look at our sample deal package and get a sense of how we structure a deal, some of the terminology, maybe some of the deal structure. Those things are in there for you to take a look at. What questions do people have? What information should you put in there? You can take a look at that and borrow. I'm completely on board with you borrowing that content if it helps you with what you're trying to do. On the flip side of that, maybe you've heard what I said and said, you know what? I need to be investing. I don't have the time or energy to do this all myself, but I want to understand what I need to be looking at. How do I know what a good market is? What kind of factors should I be paying attention to? What's a good deal structure? Take a look at it from that standpoint. Whether you're an LP, which is a limited partner or passive, or a GP, which is a general partner or active, that sample deal package can help you out. So it's CasmonCapital.com/sample deal.
Okay. So everybody, if you're driving, don't write this down while you're driving, but remember, you can always replay this, fast forward to the end, and we'll put these things in the show notes too. So it's CasmonCapital.com, right? Get yourself a deal sample. And also, make sure you subscribe to the podcast, Multifamily Insights. And by the way, speaking of podcasts, if you haven't subscribed to the Massive Passive Cash Flow podcast, please do that. But probably the most important, the main guy of all, guys, is I'm going to ask you a favor: is leave a review for this podcast. It's one of the best things you can do to say thanks to John and me for doing this, because we don't actually get paid for doing this. It's considered like a community service. Yes, we build our brand and our network, but it's very indirect, and but it's also very fulfilling. The feedback we get from you guys is amazing. And we really appreciate those reviews. So it's considered a Christmas gift to John and I. So do that. And for everybody here, thank you for participating, particularly you, John. God bless you all and your families. And we will see you on the next Massive Passive Cash Flow podcast.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.